Hi and welcome to another week ahead video. This week we think we might have an opportunity to trade the Canadian dollar as we have the retail sales report coming out as well as the BOC's business outlook survey. Now the business outlook survey is normally something that the BOC, the Bank of Canada, watches very closely. So let's jump to the video and see exactly how we can prepare and possibly trade these two events.
Okay guys, so step one of our analysis is finding the baseline for the Canadian dollar. Now currently our bias for the Canadian dollar remains weak bullish. Currently the Canadian dollar is moving based on the market's expectations for the BOC's future monetary policy direction. Now at the moment there is a lot of speculation on the BOC's next move in terms of monetary policy, as they remain the only major central bank that has not yet tilted dovish and have not adopted dovish forward guidance. Now, recent economic data has been more positive on balance, but there have been a few negative exceptions like GDP and retail sales. GDP month over month for July came in flat, but Q2 GDP quarter over quarter annualized did surprise markets with a print of 3.7%. We had CPI year over year and CPI common, which both came in at 1.9%, which is currently looking very stable just below the BOC's 2% inflation target. Now, Wells Fargo has noted that retail sales has decelerated sharply to negative 0.1% in July from a high of 1.9% in March this year. But in contrast, the bank also notes that the recent labor report was very, very positive, with full-time employment growth rising 2.2% over the past year. And more importantly, the average hourly earning growth was 4.25% in September. So overall and on net, the bias for the CAD is weak bullish given the recent data points, but it's important to note that the market seems to be waiting for a trend to develop, either positive or negative in terms of the data to develop in order to establish a clear path for the forward guidance or for the monetary policy for the BOC. Now, it is also important to note that the recent developments with US-China trade war as well as Brexit developments have been supportive for the CAD, as we did see an overall positive risk tone in the markets over the past couple of weeks. Now, the baseline for this week's risk events. This week we have two events which are of interest for the Canadian dollar. The first is retail sales and the second is the BOC Business Outlook Survey. Now, retail sales numbers are important as they feed directly into GDP. If we have a look at the expectations, we have core retail sales month over month expected at 0.1% from a prior of negative 0.1%. A minimum of negative 0.3% and a maximum expectation of 0.2%. And then we have retail sales month over month expected unchanged at 0.4% with a minimum expectation of negative 0.2 and a maximum expectation of 0.7%. Now, the more important event for this week for the BOC would be the BOC's Business Outlook Survey. Now, Scotiabank explains that this report usually gets a lot of attention due to the richness of its survey-based evidence on matters such as hiring intentions, recent production growth, expected production growth, capex plans, and inflation expectations. However, the bank also did note that the survey might take a back seat with this week's release for two specific reasons. Firstly, the report was conducted between the end of August and the middle of September, so it might not capture all the freshest views from these surveys. And secondly, Monday we have the general election in Canada, and the result of the election may have a bigger or larger impact on business expectations compared to the BOC's Outlook Survey if there is a big surprise in the elections. Nonetheless, we know the BOC pays very careful attention to the Outlook Survey, so any overall positive or negative bias derived from that report should be important for the markets this week. The only thing that can dictate the market's expectations for the BOC at this stage is the economic data. So we need to keep a close eye out for anything that can indicate a possible shift in tone from the BOC. Now, it's also important to realize that it will take a run of data that forms a clear trend one way or the other. So stay tuned into the data as a whole rather than just one or two individual releases. So then having a look at possible sentiment shifts that we can use to trade the CAD this week. If we have a look at the dovish sentiment shifts, the biggest move by far in terms of a dovish sentiment shift will come from anything that makes the market think the BOC will shift their stance to something more dovish. Any increase in rate cut expectation should be enough. Now, in light of that, if we see another very big negative deviation in retail sales this week, it might cause a short-term move, but it's it's unlikely that another negative print with something like retail sales will be enough to take away from the other recent positive data points like the labor report that we saw. Also, if the BOC's outlook survey comes out overly dovish and paints a very negative picture of the Canadian economy, that could get market participants expecting a more neutral or dovish stance from the BOC, but the details and the market reaction from that will be very important for us to note. Then in terms of hawkish sentiment shifts, guys, if we see a very big positive deviation in retail sales, basically a rebound from that contraction we saw prior, and also see a very overly hawkish BOC business outlook survey that will feed into the current optimism in the market. We have a more optimistic risk tone, and we also saw CAD being supported with that stellar employment report. So if we do see positive releases on retail sales as well as the BOC business outlook survey, that'll feed into that current optimism, and that can provide us with an opportunity to buy the CAD this week. If that does happen and it convinces the markets to drop its current obsession with a possible dovish tilt from the BOC, that could give us an even bigger hawkish sentiment shift and give us an opportunity to buy the CAD as well. So that is something just to look out for this week. Then in terms of possible currency pairs to trade and to pair with the CAD, now in the case of a clear dovish sentiment shift in the CAD, we could look to pair the CAD against the Australian dollar, which has been largely supported by a more positive risk tone in the markets from both US, China and Brexit developments. Now the AUD has also been supported for most of the last week with an unexpected positive labor report and hawkish comments made by RBA Governor Lowe. After these two events, the market is now actually pricing in just a 14% probability for a 25 basis point rate cut at the RBA's November meeting, and a 52% probability of a 25 basis point cut at their December meeting, which was above 80% just a week ago. So the AUD has definitely been very supported. So that if we do see that dovish shift in the CAD, we can look to pair that with something like the Australian dollar. In the case of a clear hawkish sentiment shift in the CAD, we can look to pair the CAD against the euro, which remains our most fundamentally bearish currency, given the market's bearish expectations for the ECB, as well as the current trend of negative economic data coming out of the Eurozone. Now, something just to highlight with this idea is that Thursday we also have the flash PMI numbers due for France, Germany and the EU. Now, given the market's current positioning on the euro, there might be a bigger reaction from a positive print compared to a negative print. So just keep that in mind in case you are in any EuroCAD trades at that time. Now, in terms of additional risks to this trade ideas, as an oil-dependent economy, oil prices and the overall risk tone will be very important factors to keep in mind that can influence the Canadian dollar either way. So also remember to take note this week of the crude oil inventories that will be released on Wednesday and any other developments that can impact the overall risk tone in the market. Now, guys, how to actually trade this event this week? If we do see a clear dovish or hawkish sentiment shift, we can trade this as a phase one sentiment shift trade. Now, if you're interested to learn how this phase one trades work, you can check out our new trading strategy playlist on our YouTube channel, where we post weekly examples of how these types of events plays out. If we do get a phase one move generated by a sentiment shift, then we can also look for a phase two pullback of that initial move. Now, we post updates on these moves inside our tradable sentiment shift reports inside the Forex Source terminal under the Market Insights tab on a daily basis. Now you can see each day which sentiment shifts are in play and which ones are still valid for trading a possible phase 2 pullback as well. And you can also learn about how these setups work during our live analysis webinars each day inside the Forex Source terminal.
Guys, as always, thank you so much for watching. If you find the content and these videos helpful, please do us a favor by clicking that like and the share button, as it really helps YouTube to suggest more of our content. Also, if you're not part of the channel already, do consider subscribing, as you'll always be notified every time that we release a new video. Until next week, guys, cheers.